Welcome to this very special edition of The Author's Voice with KAJ, a show where we explore the stories behind the stories. Here we dive into the worlds created by authors, discover their inspirations, and ensure that you walk away enriched and inspired. And today we have with us Steve Selengut, is an author, a 40 plus year professional investment manager, advisor, and whose current adventure is coaching both individuals and other advisors in creating income independence for themselves and their clients. And today we'll be talking about his second book, Retirement Money Secrets. We'll talk about. So let's dive into the story behind the story. Welcome to the show, Steve.
Well, thank you. It's good to be back. Good to see you.
Welcome once again to the KJ Masterclass, this time on the Author's Voice with KJ Steve. And I'm sure a lot of people would learn a lot from your book, Retirement Money Secrets. We'll talk about that. But first, let's understand a bit about your journey as an author. What inspired you to venture into, becoming an author, though you were a professional investment manager? And as an author, if I understand, you are the very few investment book authors who directly manage other people's money. So a lot of advice, lots of good things to learn from you, Steve.
Yeah, it seems that, when I looked at the most popular investment books that were out there, most of the people, although they were very good at what they did, they were professionals perhaps in the investing area, but they didn't actually hands-on manage other people's money, which is a whole nother mindset, because you really have to put yourself in your client's shoes and do things that not only make you comfortable, but that also make them comfortable and that achieve their goals. And over the years, as I and my clients became older, it became very clear that I had to focus more on generating income for people than just growth in market value. Growth in market value is pretty. It looks good. You like to see green numbers on your account statements, but you can't spend it. You can't spend it. When push comes to shove and you need to pay your grandkids' first year college education, takes money. And you don't want to have to sell securities to get that money to pay that college tuition. You want to have income coming in so that you can say, here's a check, you're in, bud, So I pretty much changed my focus as part of my own change in needs of my life as my grandkids got older and older, and I saw what was coming. I'd already taken care of it for my kids, and I realized, I did that out of the income I was generating. So that's the initial, let's say, eureka moment where you realize that income is more important than just the market value. And the second one is when you start to get into your 60s and you say, now it starts to become a legacy thing, where you say, I see investment advisors all over the community focusing on market value generation and creating model portfolios, which makes their job easier because they actually don't have to do any management. They just plug people into these resources, and they automatically reinvest dividends, so they don't take the time to see where it would be better to put more money and so on. And I just saw that going on. I said to myself, I've got a responsibility to show people another way of getting into their older years, how to develop a cash flow, income that they can depend on. I developed my income when I started my business back in 1979, believe it or not. I was making 5 times my salary in the dividends that were being produced, dividends and interest from my securities, and the profits that I was making when I traded them. 5 times. And that's what I was doing for my clients when I was getting older. I said, that's what we're doing. We're making more for you, for some of you, than you're making at your jobs. definitely were making more for you than your IRAs are generating, or the amount you can put into your IRA. So that's what I wanted to teach people to do. So I wrote my first book, and my first book was kind of a outraged statement of where the financial community had gone over the years, particularly the years after commissions uh, left, and everybody became fee based, like advisors are. And that was called The Brainwashing of the American Investor, a book that Wall Street does not want you to read. And unfortunately, my publisher went out of business almost immediately after they published the book, and I really didn't have the energy or the time to do it myself, and I had never heard about ghostwriters at that time. So that book kind of fell flat. I didn't make any money. I got hooked by a second publisher that was it was a sham operation, and whatever books that have been sold, I've never received a penny on them. But Retirement Money Secrets is a whole nother story. It's a story that's actually written in conversational form, and it's really between myself and a ghostwriter who was in precisely the right position in life where they really needed to know how to transition from a market value focused environment to an income focused environment, because she wanted to retire. She had plenty of money accumulated. It was making probably between 2 and 3%. That's what most people's in portfolios make. And I showed her how to make 10%. She was asking me the questions, and she was writing them down as the character in the story that we were putting together for the book. And it was just one of those matches that just made sense at the time. It was the perfect time for her. It was questions that she was asking herself and her advisor, and we were talking about them and getting those answers down on paper so that anyone could follow that conversation and get in a place where they could say, at least tell their advisor, this is what I want you to do. You tell me you only can make me 3%. I know you can make me twice that. I know today you can make me 3 times that. So please, if you want to keep me as a customer, alter what you're doing for me. I don't want to see any models. I don't want to see any securities that don't pay dividends. I don't want to see at my age, meaning the client, 65, 70 years old. I don't want to see a portfolio full of stock market securities that go up and down like crazy and don't pay any dividends. I want to see income. I want to see monthly income every month, same amount. I want you to be growing that income for me every quarter. That's what I want you to do. And this book tells you how to do it if you want to do it yourself, and how to instruct your advisor if you want somebody else to do it for you. So
Right, Steve.
And so
carry on. Sorry.
It gives me just one more sentence to finish up. It gives me the feeling that the information is out there for people to use to put themselves in the position that I've been in for the past 20 years.
Absolutely, Steve. So, Retirement Money Secrets. How have you put all those details into this? What is the format? Because it's in conversation. So how will people find, for those people who have not yet seen the book but may want to understand it through this particular episode?
We really talk about 6 basic principles. 4 of them are how to minimize risk, and 2 of them are how to change your mindset to focus on income development. The 4 basic principles of risk minimization, we give people an idea of how to determine the quality of the things they're investing in, so that they only take, they only have high quality securities. And in my case, I use closed-end funds, and they have to have been in business for 5 years. There have to be at least 50 individual stocks or individual bonds inside. You have to be able to see a steady stream of income over the years that's been produced, things like that for the quality. Diversification is the second way to minimize the risk in your portfolio. And since these portfolios are diversified themselves, we develop a diversified portfolio of diversified portfolios. So you can get in any sector, any country, all over the world, any types of businesses. Income production, everything produces income. The average income in today's environment is in the 250 different closed-end funds I use is above 10% right now. And the final thing is they have to learn how to take profits. You have to learn how to treat your securities as if they were merchandise on the shelves of your store. Everything's for sale. You have a targeted markup or profit on everything. And if somebody out there is offering you your markup of 3% or 4% profit, you take it, put something else on your shelves. And that's the mindset that you have to get to. The profit taking, that's capitalism. That's what all the companies in the marketplace are doing. They're making profits. They're not just sitting there and watching the value of their inventory grow. They're taking profits, target profits, generating profits, paying their employees more money, hopefully, and growing their business with the profits. That's what you have to do as an investor. Your portfolio is your business. So it leads, and then there's two things you need to know, two broad spectrum. The broadest spectrum is you have to understand that both the interest rates and the stock market are cyclical beasts. They go up and down. They're going to go up and down. Things happen in the world that force prices up and down. They could be political. They could be a particular country changing its approach to tariffs, for example. You get my drift. And it could be a war that somebody starts. It could be a pandemic. Things change and the market changes accordingly. With closed-end funds and with dividend stocks, the income keeps coming, regardless of what happening in the world around. And to be retired, to be an old person like me, you need that comfort level of having that cash flow. Okay, so that's the final focus point is to wrap your head around the idea that you want to grow your capital, the amount that's working for you. You want to grow your income every quarter. And that's what your focus is on. The market value, you understand, is going to go up and down. But those two numbers, the capital that you have invested and the income you're receiving, that's what you want to see growing. And that's what Retirement Money Secrets will get you to that point.
Absolutely. And who is this book for, Steve? Is it for only retired people, or is it others also can make use of it? How is it that they can just read it and understand it, or they just can guide their advisor by reading the books? Can they do it themselves?
They can do it for themselves. I have a community of investors. There are over 400 of us. All of them have read the book, and all of them are running their own portfolios. And we have Q&As all the time, and we talk about how they do it. But we have some people in that group that are in their 30s, in their 40s. Like I said earlier, when I was 29, I was already making 5 times my salary through my income being generated by my portfolio and the profits that it produced using that QDI that I was talking about, quality, diversification, and income. So a person can start anytime. Use your first IRA deposit. Use your if you can self-direct your 401k, most people can't. Use that. But when you get that first bonus as an employee, don't just buy a new car. Buy yourself a future by investing it for income, and that income can grow if you allow it to over the years. That's right. That's what my advice would be.
Right. So in a nutshell, what is it that you want readers of your book, what insights, key message that you want readers of your book to take away from this book?
Most people are afraid of investing because they haven't been educated in it properly. They don't get any education in high school, certainly, not in the United States anyway. And most college programs are very specific, and people go in with a profession in mind, and it's not usually becoming a financial advisor. So it's it's the education you didn't get in college. It's in the book, and it's augmented, like I said, by the Retirement Money Secrets Income Investing Community, which is on the school platform, and they can further their education or get their initial education using the course that we've developed to train people to do it themselves. And many of those people do it themselves, but they also have, because they're very large investors, they have other monies that they have invested privately, but they themselves instruct their investment advisor, look, if you want me here, you're going to run this portfolio to generate income, and this is what I'm expecting. So whenever you start, you can start, when you're young, you can start when you're 80 years old, like I am. So yeah, it doesn't matter. It's there. You can do it.
Absolutely. What about a lot of young people, especially? They are, they look at financial independence a bit differently. But and the portfolio, the things that are available in terms of investments, either the stock market or even in real estate, how do you think is that changing? Do you think the returns, traditional returns that we have been getting, do you think the young generation can still hope for the same thing? Do you think the stock market will be as trustworthy, whatever position as it is in the
Wow.
future? How do people plan it in such uncertainties, especially with AI and so many things? Is there anywhere they can find something new which will last them at least for their lifetime?
Well, I think there'll always be new technologies and new developments that eventually will make money for people. But I think it's a risky to figure out which companies are going to be the new Exxons and the new Microsofts and the new Amazons. I think a safer way to do that, like I said, is with these closed-end funds that I use. There are closed-end funds that specialize in AI. For example, you can get a portfolio of hundreds of different AI companies in one place that's paying you, between 8 and 10% in distributions while you hope it goes up in price. And what I do, of course, when they go up in price a little bit, I sell it and then I buy it again. If it goes up some more, I sell it, and I keep doing that with different of the closed-end funds that, have those securities. But every security that's in the New York Stock Exchange, in the Nasdaq community, in the S&P 500 average, every one of those companies is also inside these closed-end funds. So you're not missing anything by moving to a more diversified, safer environment. You own the same securities. It's just in a different package. And it's a package that's managed to give you income, not in a package designed to grow the wealth of the CEO of the company. It's managed for your income. Most of the biggest companies, the most successful companies, look at Amazon, Microsoft, NVIDIA, whichever the popular ones are today. You know how much distributions they pay their shareholders? Zero. I can't make a zero come up. But that's how much the investors are getting unless they take their profits. So it's a different
Absolutely.
approach, it's a different focus. But in the long run, it's going to give you, when I was making that kind of money, I said to myself, why am I commuting to New York City an hour to an hour and a half a day, every day? Why do I have this wardrobe of 3-piece suits and 100 ties? Why am I doing this? I don't have to. I can do this this management that I'm doing for myself, I can do that for other people and make them have enough money to make the same decision that I did. I'm going to start another career. I'm going to start doing something that's more me oriented than working my butt off for people who don't even know I exist.
Absolutely, absolutely. There is much to learn from you about all these things, Stephen, and also and a lot to learn from your book, Retirement Money Secrets: A Financial Insider's Guide to Income Independence. A lot of people would want to connect with you, learn about your book. What is the best way for them to do so, Steve?
Uh, the book has all my contact information in it. It even has instructions on how to join the educational community. I also have a website called theincomecoach.net, and I do have some private coaching services that they can see there. But if they're in the community, they get half price on all my coaching services. So.
Absolutely. With this, it's a wrap on this very special edition of The Author's Voice with KAJ. Thank you so much indeed for joining us.